In July 2026, financial feeds lit up with a major headline from Robinhood's Q2 earnings report. The standout metric driving the news was a massive surge in overall trading volume on the platform. We're talking about millions of individuals tapping their screens and executing trades simultaneously, sending a blinding blur of orders into the system daily. But there is an interesting quirk to this specific platform. Robinhood famously pioneered zero-commission trading, meaning it costs a user absolutely nothing to execute these transactions. If the primary service is handed out at a price of zero, why exactly does Wall Street look at this tidal wave of free usage and see a towering financial victory? In the modern internet economy, raw volume operates as its own form of currency. To understand this Q2 earnings win, we have to look under the hood of free trading and trace exactly where your tap on a screen turns into hard corporate revenue. When you hit buy on your phone, the app confirms the trade instantly. But behind the screen, the mechanical journey of that stock purchase is just getting started. The hidden engine driving that journey is a mechanism called payment for order flow, or PFOF. This diagram maps out the reality of a modern digital trade. When you submit an order, Robinhood does not send it straight to a public stock exchange like the NASDAQ. It deliberately bypasses it. Instead, your order is routed to massive private financial firms known as market makers, who step in and execute the trade on the other side. For the privilege of handling your trade, that market maker kicks back a tiny fraction of a cent to Robinhood as a finder's fee. A fraction of a penny on a single share of stock means very little, but multiply that by millions of users, making multiple trades every single day, and the math compounds into hundreds of millions of dollars. This specific loop makes frictionless trading highly profitable, but it relies on one strict requirement: the user can never stop trading. Under the payment for order flow model, record volume is a mathematical guarantee of revenue. Continuous user activity is the lifeblood pumping through the company. If we look closely at the Q2 earnings, standard stocks weren't doing the heavy lifting. The massive surge was driven heavily by crypto and options trading, which raises a question. Why does the platform care if you buy a volatile cryptocurrency instead of a safe share of a blue-chip utility company? The answer comes down to a metric called the spread. This is the measurable gap between what a buyer is willing to pay for an asset and what a seller is willing to accept. This chart shows how the spread works for a standard stock. With stable, highly liquid traditional equities, the gap between the buy price and the sell price is incredibly tight. There is very little wiggle room. But volatile markets like crypto and options feature rapid, unpredictable price swings. Those violent swings create a much wider gap between the buyers and the sellers. Market makers extract their profit from that exact gap. Because they make more money navigating wide spreads, they pay Robinhood a significantly higher finder's fee to route those specific volatile trades to them. All trading volume is not created equal. Pushing high-risk, high-volatility action is the highly calibrated profit engine that supercharged Robinhood's Q2 bottom line. Bringing this back to that July 2026 headline, the record volume takes on a very different shape when you factor in order flow and wider spreads. The earnings report proves the platform operates as a highly optimized engagement engine, far removed from a passive utility where you slowly buy and hold stocks over decades. The frictionless user interface, the carefully timed mobile notifications, the bright colors, they all serve the mechanical purpose of this business model. They reduce hesitation and encourage you to trade frequently. Provided retail investors stay highly active in volatile markets, this mechanical loop converting sheer volume into corporate revenue will continue to break financial records. A headline celebrating record volume on a zero-commission platform means exactly one thing. It is proof of an invisible financial machine, fueled entirely by our constant daily action.